Hi guys, good morning and welcome to this Money Control live stream. You're watching IPO Watch with me, Nandita Khemka. Well, it has been a busy period for the primary markets. We've had a host of IPOs hitting the street. We've had a fair bit of new listings as well. And today, of course, we are focusing in on the IPO of Edtech company Physicswallah. The 3,480 crore rupee IPO has kicked off for subscription, 3,100 crore rupees via fresh issue. And of course, we all know that this company started off as a YouTube channel offering free lessons to turning into a unicorn in just 18 months, and now of course it's making its way to the Lal Street as well. If you talk about the anchor book, they have already raised over 1,500 crore rupees in the anchor round. Some of the marquee names I want to really read out are the likes of Goldman Sachs Asset Management. You have Fidelity, Franklin Templeton Global, Eastspring Investments, Pine Bridge, White Oak, and of course on the domestic side as well, good participation coming in from ICICI Mutual Fund, Kotak Mutual Fund, Nippon Mutual Fund, Aditya Birla Sun Life. It's a long list. Of course, these are some of the notable names that have participated in the IPO via the anchor book. Now, to understand the post-listing roadmap and where the next leg of growth will come from for Physicswallah, we're joined by Prateek Maheshwari, who is the co-founder and whole-time director of the company. Prateek, first of all, thanks a lot for taking out time and joining in. Congratulations on your IPO. We've seen a good, number of funds investing on the institutional side. Of course, how the retail responses we'll get to know as the IPO progresses. But Prateek, you had humble beginnings. Began as a YouTube channel. Of course, now you're running classrooms offline as well, and of course, now you're on the verge of listing on the Lal Street as well. Give us a sense on how the journey has really been, right from 2016 when Alak started posting free videos online.
No, thank you, Nandita. Till 2020, Alak had built this, India's biggest education channel with 30 lakh subscribers, and 2020 in the mid of COVID, company was born, so we are a born out of community, we are a born out of COVID as a company, we are the fastest unicorn of the country, became unicorn in 18 months from inception of the company, and we are the fastest company who reached 3,000 crores of top line, in less than 5 years. So why this have been happened? Because our core thesis was very different. We brought highest quality education at a very affordable prices. Our average fees for the entire year, all subjects live learning is 4,000 rupees. 4,000 rupees for live learning, doubt solving, mentorship, revision, everything put together in just this price point. That allowed us to 95% of the education market of the India was unorganized, so we have organized that market a lot, in just 5 years of time, we have more than 45 lakh paid learners. 93% of the learners learns in online mode of learning and 7% of the learner learns in offline mode of learning, and in past 2 years our revenues are 4 times and our EBITDA is also almost 4 times.
Sure. Of course, you've had a phenomenal growth story. We'll talk about the financials in just a bit. Of course, student first approach, affordability, these are some of the factors that differentiate you from your competitors, so to say. But post listing, what would the pricing strategy really be? You said 4,000 rupees for the entire course, that includes, of course, mentorship, revision, everything, what have you. But of course, your competitors are offering the same courses at 80,000 a year, so to say. But on your pricing strategy now that you're a listed entity, would you change that in any way, or would you be okay, or would you continue with that approach of affordability going forward as well?
Right. See, fundamentally, why we have started this company is to improve the access of education in the country. There are a lot of students out there who never had access of good quality structured learning. So that was the core mission with why we have started this company. So the pricing is not a strategy; it's a choice of the company that we want to keep our the fundamental learning prices has to be affordable, but at the same time, we have been significantly increased our revenue by introducing value added services on top of this fundamental learning, so there is a whole, currently we are working on a population scale, we have even iPhone users, high-end mobile users, as well as tier 3, tier 4, tier 5 city students. So we have all sets of pricing products is in place, but what is more important is the number of enrollment should increase. We wanted to teach each and every kid of India, whatever the mode of learning, whatever the language of learning, we wanted to create value for that, for those students. So major growth will come from higher enrollments in upcoming years, and there will be a slight adjustments in the base prices of our batch.
Okay. If you talk about slight adjustments, how much of a percentage are you looking at?
That
Just
is an inflation
some color
adjustment,
on that.
the that will be adjusted to inflation, 6-7% in the base price. But in India there are 30 crore learners, and how many learners we are teaching at this point of time? 1.5% of this 30 crores, 45 lakh learners, so there is a 98.5% market left out there. We wanted to penetrate that market. So for that, we have launched 11 different Indic languages, like 200, more than 200 YouTube channels covering 38 exam categories. We are number one in 50% of those exam categories. Number one in terms of number of students, revenue, outcomes. Be it engineering entrance, medical entrance, civil services examination, GATE, which is engineering PG examination, CAT examination, CA foundation, CA inter, commerce. All these exam
Yeah.
categories, we are number one.
Hmm. Okay. So, in terms of categories, you're present across 13 course categories, if I'm not mistaken. So, what is the next frontier going to be? We all know that test prep, that is the core. But would you be looking at branching out into skill-based learning segments more, scale up professional courses more? I mean, where is the next frontier of growth coming from?
So amazing growth frontier is coming from Indic languages as well as state boards. So in India, in grade 9, 10th, 11th, 12th, there are 5 crore 70 lakh learners. That is a huge market. For example, UP alone has 1 crore students in grade 9, 10th, 11th, 12th. These students learns in Hindi medium. So this is an amazing growth lever, as well as we have ventured into grade 6, 7th, 8th as well. Launched it last year and seeing amazing results in going in early ages as well. Skill, we have already PW skills as a vertical, which is also growing at a good rate. But we want to grab learners early because the first digital purchase of any online course is happening with us, so that gives us a great lifetime value for the students, so that is the strategy which you will see in upcoming years.
Sure. So you acquire students online and then that translates into offline as well. Let's now come to your offline strategy as well. You have, I think, over 300 centers now as of June 2025. What's the aspiration like going forward? And which are the regions that you would like to target next?
Hmm. So, our offline story is very complement to our online story. 80% of my offline admissions happens through online only. So student, there's a 25 lakh students comes to the application and website on a daily basis. They just see nearby centers and takes admissions in our offline learning centers. In terms of opening a new center also, if we have sufficient learner base in online in any certain pin code, we just go and open an offline learning center, and by sending a notification and doing an offline event, the center gets filled. But what unique thing about our offline learning center is we have created a tech enabled offline learning centers where each class gets recorded with a very high resolution camera, as well as student can participate in test online. They can ask doubts while they are at home as well, so it is a very unique data driven offline learning centers which we have designed. We are planning to open 200 more centers in upcoming 3 years,
Okay.
and that will be a compounding story for next 10 years, so we are number fifth in terms of as a player in terms of revenue in offline. So there is a huge headroom. 93% market is left, which we will have a significant market share. But interestingly, I am the fastest growing offline chain. We have opened
Hmm.
170 centers in past 2 years. That is
Yeah.
almost three times more than our competition. So
Hmm.
although I'm not the largest, but I'm the fastest growing. So I will become number one player in in couple of years.
So over the next 3 years, you'll have a total of 500 centers. Help me understand how much time does a new center take to break even? Of course, you will be using some part of the proceeds for offline centers as well. But would you require more capital going forward to expand offline?
So, historically, if you see, we have raised primary capital of
Yeah.
$200 million, but I'm sitting on a treasury of $300 million. What does this number says? We have grown to this level without using private equity capital. We are the only consumer internet company where the founders and the employees put together holds 84% of the company. Having said that, these 200 new centers will require 450 crores of capex. We are sufficiently capitalized to open these centers. At the same time, we have kept this as a part of our use of proceeds. Offline center profitability, second years, when second year of operations, the offline center typically breaks even, and third year of the operation, return of capital, kicks in an offline learning center. So this is a typical growth trajectory of our offline learning centers, which happens in break even happens in second year and return of capital happens in third year.
Sure. Since you mentioned that you have a fair bit of capital to expand, but I will also come to your financials, right? You've turned EBITDA positive in FY25. And in fact, I was just going through your past 3-year financials. Sales and EBITDA have grown at a CAGR of, I think, 97% and 89% respectively. But of course, we'll talk about profitability later. But don't you think on offline expansion would turn out to be a little EBITDA dilutive going forward? In that sense, give us some color as to whether or not you expect to continue being EBITDA positive. And of course, next comes the question of part to profitability. Because Q1 FY26, you handed in a loss of 127 crores, which was slightly higher than the same quarter last year. So here on, how does this whole expansion pan out in terms of EBITDA? And on the net level, the street wants to know, when is it that we can look at a net profitable, business going forward?
Mm. Right. It. So, Nandita, if you see our EBITDA improvements, as you mentioned that, we have improved 4 times our EBITDA in just past 2 years, and this is a very unique business model where student fee pays fees upfront, so we sits on a good high treasury. EBITDA improvement is continuously happening. If you see percentage of the people cost of total top line, FY24 it was 60%, FY25 it came down to 49%. 11% of the improvement in just 1 year of operation. So we are a very fairly young company, so there are a lot of leverages in terms of marketing cost, in terms of people cost, in terms of tech cost will kick in future. Having
Yeah.
said that, we have generated more than 1000 crores or free cash from our operations. FY25
Hmm.
alone, we have generated more than 500 crores cash from our operations. So at a cash level, we generate every year a lot of cash. And in terms of EBITDA profitability, company will continue to remain EBITDA positive. We don't see quarter to quarter. In terms of
Okay.
the company, student enrolls us for the entire year. So the entire year picture is the right way to look at it, because quarter one and quarter two for a company like us are always EBITDA negative or PAT negative. But quarter
Hmm.
three and quarter four are the quarters where revenue, the entire revenue gets accrued, and EBITDA and PAT profitability comes into picture. In terms of PAT level profitability, you will see very soon, because we have
Hmm.
demonstrated historically a great improvement in our EBITDA, and that will translate into PAT profitability. PAT profitability is not a challenge at all.
Sure, but
Uh,
this year itself, I mean, I know you can't give forward guidance, but
yeah.
could we hope
But
that this
very
year
soon is
itself
the
will
right,
return
very
to?
soon is the safe statement, because
Hmm.
I cannot give any forwards definite guidance, but PAT
Hmm.
profitability will kick in very soon. We are super comfortable to achieve PAT level profitability. But what is
All
more
right.
important is India has 30 crore learners, and I
Hmm.
am not even scratching the surface. While I'm the fastest growing company, not just in education, not just in consumer internet, any company who have been ever listed in the Indian Stock Exchange, we are the first
Hmm.
company who achieved 3,000 crore of top line in less than 5 years. And interestingly, we are the only company, consumer internet company, where none of the existing investors are selling at a time of IPO.
Yeah.
You see a
Hmm.
high, offer for sale from existing investors, but our current existing partners, believed in the story so much that none of them have participated in this issue.
Sure. Let's also come to a very hot topic that's been a talking point when it comes to all the recent IPOs, and that's valuations. 10 times sales, that's the valuation you guys are commanding. You have a strong digital community. Of course, you have scale, you have a hybrid model as well, and that sets you apart. But still, would you say that this valuation is justifiable because of the fact that you are yet to achieve profitability? Of course, you've said that that will happen very soon, but valuation wise, do you think there is enough for on the table for investors?
So interestingly, since none of our private equity partners were selling, what we believe that we are leaving a decent amount of value on the table. How media and how you guys look at valuations are at the past numbers, but for a hyper growth company like us, it is very important to value us on a forward numbers, because ये जरूरी नहीं है कि ट्रेन कहाँ से आ रही है, ये जरूरी है कि ट्रेन जाकर आ रही है, and at the same time, especially the sector which we are in, have not a lot of success in past, not in terms of private market as well as public market, but we are a very unique company with a very unique tech driven, community driven business model, so that is why, you would have seen a great anchor participation,
Hmm.
which have announced yesterday, see, valuation is which decided by the market forces,
Yeah.
and since none of our investors were selling, we had no pressure to price it well and leave a lot of value on the table. Still 80% of the
Hmm.
company owned by me and Alak, and we are going to run this company for rest of our life, we stand for a mission, we stand for a vision that every student in India should have best quality education access, at a most affordable price, that makes us a very very unique positioned company as well, and of course, once we perform, once we show market a pat profitability, and once we show a great revenue growth in future, all these numbers will become
Hmm.
market will understand all these valuation numbers with time.
Sure, with time, of course, we'll get to know, but also give us a color on the margin picture. Of course, you've earmarked a part of the IPO proceeds towards lease payments and fit outs. And should investors, envisage or look at some kind of margin pressure as you continue scaling offline? Give us some color on your margin levers as to how they are placed right now.
See, since we are a very young company, there are a lot of leverages, which are currently factored in within our future projection models. One such projection is leverages percentage of the people cost out of a total revenue. That is the biggest margin which we have. Every additional student which comes to my online is not just a top line addition; it's a bottom line improvement as well, because cost of delivery remains same, teacher cost, the tech cost, everything remains the same. At the same time, percentage of the marketing spends, already we are at less than 10% of the total revenue we spend in marketing, but that number will also will come down drastically with time, as well as percentage of tech cost, of a total revenue, that is also with the economy of scale, server cost comes down, with the higher volume of the students, so there are a lot of leverages, and while a lot of AI usage, which we have started very recently within the company, will give me additional leverages with time. For example, AI is solving doubt very efficiently. AI is now making test papers very efficiently. For
Hmm.
all of my future growth aspects, I need not to hire a lot of folks. So these are some great leverages which are factored in, in our roadmaps.
Okay. All right. Taking your point. Talk about some of these recent or some of the past acquisitions that you made, like of Utkarsh, Xylem. They are still loss making, and you will have to. I mean, they also require capital support right now, right? So going forward, do you expect them to pressure your cash flows, because you mentioned that you have positive cash flows sitting on the books right now, but will you know these arms, so to say, will they keep requiring capital for more time to come, and how much more time?
See, historically, we have invested only $50 million of capital to partner with these companies. And what was the core thesis to partner with Xylem? Fundamentally, we want to expand into southern part of the country, and we find very similar company as Physicswallah in Kerala. and their revenue also jumped by 4 times, and they also went into a hyper growth after we intervened in terms of tech support as well as the business strategy support, so these subsidiaries are continuing to grow at a hyper growth, and of course they are also have a similar path of trajectory to profitability. Utkarsh was
Hmm.
a very interesting acquisition where we have built very similar government exam business within PW with the help of Utkarsh. In terms of overall contribution to the top line, they are less than 15%, in terms of top line. So they are any which way is very small, but there is absolutely zero pressure in terms of cash flows. We are sitting on a 2000 $300 million, almost $300 million of treasury,
Hmm.
so cash flows as well as overall profitability, there is zero challenge from our subsidiaries.
Okay, zero chance. But in terms of acquisitions, any more in the pipeline in the near future as you look to expand?
So, see, we will be the first mid-cap listing in terms of education that allows us to consolidate the market. Having said that, buy versus build, we always we always wanted to build in-house, because once you build,
Okay.
you have more controls. It's culturally aligned to the vision of the founders and the senior leadership, But never say never.
Okay, never say never. Of course, we'll also keep an eye out for any more acquisitions that may be on the anvil. Last couple of questions, really. Of course, we can't really draw any parallel with some other players because of the affordability factor and your student first approach. But is there anything that you consider as a threat to business going forward?
So, I'll say no immediate threats for us, but a challenge would be how company will perform in Indic languages, the 11 Indic languages which we have launched. We are seeing some of very early great signs, as well as another good opportunity is AI, because AI is impacting education in a very positive manner. So these are some good interesting area where we need to perform, and we need to be ahead in the curve,
Right. Also, in terms of your top line aspirations, of course, as you mentioned, you've hit almost 3,000 crores in just very nominal 2 3 year period. And what are your aspirations over the next 3 years? And in terms of market share as well, I think currently you're at 7%. So, what is
Yeah.
the
See,
runway you see
offline
there?
market share is 7%, but overall, if you see India education TAM, there are 30 crore learners. I am sitting at a 1.5% market
Hmm.
share only. See, growth, the revenue growth is not a challenge. We have demonstrated both top line improvement and bottom line improvement historically. So it's a very well governed, very well corporate, disciplined company. And as well as we are a very young company, we are also, while building, we are learning a lot, at the same time.
Hmm.
So growth is not a challenge at all. India has more than 6 crore tech takers on an every year. This market is growing at a 15% CAGR. By 2030, the India may have 10 crore learners, 10 crore test
Hmm.
takers. We are only penetrated 6% of this market at this point of time, so we
Hmm.
have a headroom of 94% with our price point, with our unique price point and the proprietary patented technology, where the AI powered mega classrooms where thousands of students study together, allows us to enter into remotest part of the country, so
Hmm.
revenue growth is not a challenge at all.
All right. Last question really. As a sector, education is a very, very interesting space, but it has, of course, seen a lot of challenges and scrutiny as well. One of the players mired in lawsuits. There's another one that has shrunk dramatically. Investors, I would say from a market standpoint, had written off the sector, so to say. So if Physicswallah keeps ticking the right boxes and starts delivering net profitability as well, how confident are you of changing that script that has been going around for quite some time? And any message that you would like to give to your prospective shareholders?
So, very rightly said, be it private market or public market, there have been a lot of casualties in the sector, तो हमारे साथ नंदिता यही हो गया कि लड़का अच्छा है पर मोहल्ला खराब है, तो
Hmm.
doesn't matter, because once we come and perform, the perspective of the entire public market as well as investors will change with time. What is more important is कि जो ये टियर 3 टियर 4 सिटी का बच्चा है, जो स्लम का बच्चा है, लेकिन उसको अच्छी क्वालिटी एजुकेशन मिले, लेकिन वो एम्पावर हो, और जो ये अमेजिंग इम्पैक्ट कंपनी क्रिएट कर रही है, लेकिन वो कंटिन्यू होना चाहिए। फॉर एग्जाम्पल, आपको मैं कुछ स्टोरी शेयर करना चाहूंगा। कश्मीर का एक पेंटर जो दिन
हाँ।
को पेंट करता था, रात को अपने भाई के मोबाइल फोन से पढ़ करके गवर्नमेंट मेडिकल कॉलेज चला गया। राजस्थान का एक बच्चा जिसने 5,000 रुपए में बकरी बेची, 4,000 रुपए का कोर्स खरीदा, वो हमारे कोर्स से पढ़ के IIT BHU कंप्यूटर साइंस के अंदर अभी पढ़ रहा है। आई स्टडी फ्रॉम द सेम कॉलेज मैकेनिकल इंजीनियरिंग, तो thousands of doctors and engineers, we create, which are the first doctor and engineers of their respective villages. किसी गांव से एक बच्चा सेलेक्ट होता है तो 10-15 गांव मोटिवेट हो जाते हैं, तो दैट मेक्स अस अ वेरी यूनिक, जो कि philanthropic नेचर है, जो सोशलिस्ट इन नेचर है। एट द सेम टाइम, वी हैव हिस्टोरिकली वी हैव शोन ग्रेट ग्रोथ इन टर्म्स ऑफ रेवेन्यू, तो vision and mission is more important. Revenue, EBITDA, PAT, they are some byproducts. So we will continue to focus on the basics of the value creation for our learners, or of course investors के लिए, सबके लिए value creation अपने आप हो जाएगी.
Okay, value creation हो जाएगी, and let's hope that physics वाला, मोहल्ला खराब भी हो तो hopefully physics वाला will set the right example. So hopefully that will happen,
Yeah.
and I wish you all the best for your IPO. I hope you get a
Mm.
great response and a subsequent good listing as well. But of course, I hope to continue meeting every quarter now that you will be listed to take stock of
Sure.
when you really turn profitable. Thanks a lot for
Yeah.
joining in, Prateek, and
Thank you.
wish you all the very best.
Thank you. Thank you.
Well, with that, we've come to the end of this edition of IPO Watch. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news. Thank you for watching.